Welcome to the briefing, Friday 14th, final day of the week then. So lots to cover actually in this briefing, and quite an interesting day ahead. Certainly got some decent scheduled news flow coming at you this afternoon from the US, so we'll talk about that in a minute. But just trying to catch up on stuff that's happened overnight really, and I guess the back end of yesterday, just starting with the cable chart here. If you look at my top left chart, just looking at cable since the vote, of course, and this week then, obviously on the 7th of October, we took a big stride to the downside, and for now the 120 handle on the futures, at least, this was the flash crash night, remained intact. On the spot we did go below that, but ever since then, of course, it's been a consolidation phase. We had a couple of, the other big down day I guess was the 11th of October, but ultimately we are kind of developing a little bit of what you might call a flag here at the bottom of that flash crash move. Developments on this kind of front, let me show you a screenshot. I'm going to move my screenshot across. Obviously we're starting to get some, I think now the whole country knows about inflation. I would say until it takes something like a jar of Marmite or other products that everyone buys, it takes that being on the front page news and the idea that price is going to go up by 10% for everybody in the country to realise and understand what inflation is. I don't think people understand what inflation is, but because they've never encountered it as a concept, they just go to the shop and buy stuff. And actually, we haven't really had any inflation for a long time, so it's not really part of anybody's sort of consideration. But it is now, and I actually think that this could have a negative impact on consumption in this country. I mean, across the board. I think if people are now very conscious of the idea that prices are most likely going to rise, and are most likely going to rise, substantially, 10%, that's not a small amount. If people are now conscious of this, it might start influencing their spending habits. We'll have to see, but it's certainly, this inflationary saga is inevitable. For now, Tesco's, good on Tesco's for standing up for us. And for fighting back, and it looks like they've won the battle for now, but they're definitely not going to win the war, that's for sure. Prices will rise, this is a fact, and especially that cable chart I was showing you, if cable does carry on going down, which is highly likely, then the inflationary negatives down the road come all the more pronounced. So this is quite a nice graphic in here. I don't know where you fit on this sort of this chart. Maybe, it is possible. Well, anyway, on the Brexit vote, given that we've got Brexit on this little slide here, certainly some interesting developments, to say the least, on that overnight. Most significantly from north of the border. So Sturgeon, who's obviously the First Minister in Scotland, has then officially put forward an independence referendum bill. So she said, "I'm determined that Scotland will have the ability to reconsider the question of independence and to do so before the UK leaves the EU, if that is necessary to protect our country's interests." So, this is the thing. If we're moving towards a Brexit, then it looks like, we're going to get Scotland leave the UK as well. Scotland voted, I can't remember exactly the numbers, but it was certainly well into the 60s. No, wasn't it into the 60%? All right, we'll check anyway. But certainly Scotland voted to stay in the EU. If you take Scotland and isolate them as one country, they voted to stay. So they feel like they should be in control of staying. And so if we do move towards a Brexit, then we're most likely going to have the UK break up as well. So, it just ups the ante, obviously. So on the European side, on the Brexit front, Donald Tusk, who's the EU president, he made some comments And he basically put it out there pretty cleanly, and he said that, look, you've got two options. It's either a hard Brexit or it's a no Brexit. So, the idea that the UK can negotiate some kind of favourable deal where we retain access to the single market but regain control of immigration and so on is just not going to happen. Or at least, this is the fighting talk before negotiations begin. But what Tusk said was the only real alternative to a hard Brexit is no Brexit, even if today hardly anyone believes in such a possibility. He said the essence of Brexit, as defined in the UK referendum campaign, means radically loosening relations with the EU and a de facto hard Brexit. He then said something that definitely got lost in translation, because he said there will be no cakes on the table for anyone, but rather only salt and vinegar. So I don't know what that means, but anyway, so that's what he said. So look, you've got it coming at us from both sides here. Scotland threatening to leave, Tusk being aggressive with his words in terms of how this is all going to shape up and pan out. So look, I would say from a sterling point of view, not too much action today. Let's just zoom in on this and go to like a 1 hour chart on my sterling chart. Let me switch my screenshot across to the platform. So here we are, just over the last sort of couple of days, and we've had a drift higher yesterday afternoon, a pop just after the European close, and we went up to make a new high. Didn't quite reach the 123 handle. This is on the futures. We've drifted lower overnight. This Sturgeon news north of the border hasn't really had too much of an impact, but you would certainly say, well, I guess can sterling go lower? Let's just answer that question. I'm going to go to a really long-term chart here. Is it possible for sterling to go lower? I can't get my chart going back further than 2001 here. So I've only got a 15-year view. This is a yearly chart. I was wanting to see back to the 1980s, which is when the last time we were down in the 120s here. But, if can sterling go lower, I would say, personally, I would suggest to you it is almost impossible that we're not going to go below 120. I would say we are... I would put it at over 90% chance that we go below the 120 handle. So that definitely means, in my opinion, obviously I could be wrong, you might have a different one. In my view, I would be exceptionally surprised if we didn't go below 120, at least. So, the way these things pan out, this negotiation with the EU isn't going to even start till March. And before then, we're going to get a Sturgeon event. We're going to get the Europeans being aggressive. And you're going to get the Conservative Party also being aggressive with some of their language. And this is just not going to help from an uncertainty point of view. So sterling, I would say, is definitely going to carry on going lower. And this is going to increase the inflationary risk, which ultimately is going to feed through to the consumer. And I would say, therefore, we are going to have, ultimately a bad economic event here in the UK, even before we get anywhere near actually leaving the EU or not. So there we go. That's the update. I'd definitely still be playing this from the downside on sterling. I mean, I think from that pennant point of view, we've got this flag formation just as we've consolidated since the flash crash, if you like. And, we're kind of right in the middle of that right now. But, certainly on the downside, the low from the 13th at 121.44 is key. We're right in the middle of that range from yesterday's session right now. So it's a little bit directionless at this moment in time on the 122 handle, which is so far being a bit of support. But I'd still favour the downside for sure. Just looking actually at oil on my right-hand chart here, as that has just broken back above the $51 handle. So the high point we had back on Wednesday up at 51.17. So just be aware of that level as oil just breaks higher, continuing that rebound that we had post inventory data yesterday. What a mess, carnage really off that inventory off those inventory numbers yesterday. Complete chaos. Certainly a spike higher, then a big one lower, then noise, and then ultimately we drifted back to the top into the close. So a real mess on oil yesterday. Let's talk about some of the other data overnight. Something quite interesting. We've had an event. We've had an economic data release in China that has resulted in an outcome that we haven't seen for 5 years. Does anybody know what that is? Type it in the room before I reveal the chart. Well, here you go. This is a chart of the PPI month on month for China. This is Producer Price Index, otherwise kind of known as what we might describe as factory gate prices. So this is prices that producers are paying, if you like, for components. Then they build their product and then they sell it, and the price they sell it at, well, that's CPI, right? If you want to simplify it a little bit here. So this is this price point, and look, we've got a plus 0.1% print here. Now I'm only showing you the last 12 months on this time frame, but if I went to a 10-year chart, then you'll see what I mean. The last time we had a positive print on PPI was at the very beginning of 2012. So we've gone, it's actually 54 months negative. And we've ticked back into positive territory. This is certainly an important moment. I mean, we have been trending higher for the whole of 2016. So you might have said this, you could have seen this coming. So it's not like this is, wow, a shock surprise. But it is notable that we have finally made it back above zero. So the lowball inflation conditions in China, perhaps we're just beginning to see the end of the tunnel on that. Off the back of this data though, Asian markets from an equity point of view were higher, apart from Chinese markets, which were actually lower. Maybe there's an angle here that if we do start seeing inflation on the uptick, then the People's Bank of China will have less room to be accommodative. We also had some new legislation put through on house purchasing in China overnight. So now, again, efforts to try and contain the latest bubble. I was looking at this actually. Let me just bring up the chart if I can find it very quickly. If you look at the house index chart, house price index chart, if you look over the last 5 years here, this is Chinese newly built house prices, year-on-year change. We had a bit of a bubble 2013 that was contained, but look what's happened. We obviously hit negative territory for a period there, but look, over the last 12 months, punching higher, and we're back up to that point we saw in 2013. So the property market bubble headline mill is back in action. But what they've done overnight is to say that right now, if you want to buy a second home in China, you have to buy it with your own cash. You can't borrow money to buy a second house. This is quite a significant change, actually. Certainly the most significant change they've made on trying to control house prices in this whole post-crisis era. So that's quite interesting. Maybe some of the home builders taking a bit of a hit, and perhaps why some of the Chinese market or Chinese equities are down, as well as the PPI numbers maybe reducing the chance of the People's Bank of China being accommodative. Loads of data from China, by the way, over the next sort of 5 days, culminating in the big one, which will be the Q3 GDP print. This will be Wednesday next week. Okay, so definitely a lot of top-level Chinese data coming at us. So keep an eye out for that. Let's have a look at the calendar for today. As I was saying a minute ago, definitely quite a busy one this afternoon. Not so much this morning. We got some construction output data from the UK. That's at 9:30. You see, other than that, it's actually pretty dull this morning, let's be honest. Just from a data front this afternoon, though, not dull. So retail sales for the month of September for the US. This is important. It's important. I'll show you the chart because it was really bad for August. We had a drop to minus 0.3. We need to see this tick higher. We are expecting it to. It's expected to jump to plus 0.5. There's a subcomponent to this. It's called the control group number, so the retail control number, which is an important component for GDP measurements. This is for September, remember, so the final month of quarter three. So this is important for updating GDP estimates for that quarter. So this is important data, definitely at 1:30. We've got business inventories, which is not important, but more important, University of Michigan consumer sentiment, which is expected to tick up to 91.9, which would be the highest we've seen for 4 months. We had a couple of punchy numbers in the summer, May and June. We slipped back since then, so we want to see this uptick continue. So this is US data. On top of that, in the US, we got some big earnings numbers coming. So really earnings season properly starting today. And we got the big three banks, Wells Fargo, JP Morgan, Citigroup. These lot are reporting earnings before the opening bell. Wells Fargo here on the, let me just show, yeah, I'm showing you on the FT article. Wells Fargo perhaps most in the spotlight given the, I guess the litigation risk that's suddenly erupted. Obviously this has resulted in their CEO and chairman, indeed, Stumpf has gone. This was news from earlier in the week. He leaves with immediate effect. His replacements, they've actually split his role. They're going to have two guys. One will be CEO, one will be chairman. Both are long-term internal servants to Wells Fargo. This is considered to be not a good move by markets. It's thought to be, it's just going to be more of the same. You know, I think Wall Street wanted a fresh person to come in at the helm and, you know, really just kind of start again. But Wells Fargo, the thing about the earnings, though, we're going to get today, this saga, this thing that erupted, this is where they were, this is where they probes. There's a load of lawsuits that have just been filed because of the fact that Wells Fargo basically sold 2 million customer accounts without customers' consent. All right, this is the saga. I'm sure you've read about it. The thing is, this won't probably have impacted much on their quarter three numbers because this kind of saga really hit at the end of second week of September. It actually broke. So this is like the end of quarter three. So it's not likely we're going to see any negative factors hit their numbers, but they're going to talk about the future, and this is what people want to hear about. So really, I'd say it's forward guidance on their earnings report that's going to be most interesting. So this is coming as well as Citigroup, as well as JP Morgan. You know, these are the three big guns from the US, and you know, certainly important for getting a gauge on how the whole sector has performed. And actually, you know what? I think about European banks as well. This will be an important set of data for gauging how European banks have also fared in quarter three. So this is certainly important before the cash open. Right, so we've talked about Brexit, we've talked about China, we've talked about the US data. Let's just flick back. There's one more thing happening today that's scheduled. It's not until later on tonight. And it's actually, well, it's got 5 p.m. here, but I think it's going to be later than that. So we've got Yellen speaking. And, you know, this is important. We obviously had the minutes from their meeting from 3 weeks ago on Wednesday, which really didn't tell us anything we didn't know. But remember, that was information from a meeting 3 weeks ago. So Yellen's going to be talking tonight. Whether she's going to mention or talk about, you know, current monetary policy conditions, we don't know. But the title of the conference that she's talking at is the Elusive Great Recovery, Causes and Implications for Future Business Cycle Dynamics. Whether she's going to talk about policy like in the near term, we don't know. But, you know, as it stands, I don't think everybody knows what's going to happen. They're not going to hike in November, even though Trump is car crashing out of the race. You know, I think you're still going to be getting a Fed that can't hike, you know, literally 5 days before the election. So, you know, unless something remarkable happens where Trump actually does officially drop out of the race, and it's literally a one-horse race, which, I mean, would of course be unique and unprecedented, but I guess given what's happening and the way it's going, not impossible. Barring that, the November's off the table and December is when we're going to see the hike, and it's a 65% chance, blah, blah, blah. So Yellen, we'll be talking tonight, and I say delivering the same kind of message. I don't think she's going to tell us anything new. And I think we stay with the kind of probabilities we've got, and that's a most likely 65% chance of a deck hike. But that's happening later tonight, well after the European close. Okay. So just kind of finishing with a little bit of a roundup on the charts. We definitely had a bit of a wobble yesterday on risk, which importantly for now stabilized. If we look at the daily chart of the S&P here, big strides to the downside. I have to say, just wanted to give a shout out for the US Amplify US strategy team yesterday for absolutely nailing it pretty much across the entire spectrum with regards to the trade ideas. So the S&P was certainly one of them. And, we definitely got a little bit of, well, not a little bit, some really heavy downside. If I go to a 1 hour chart, we definitely got some heavy downside. It was early on in the Asian session. We then went again as the US guys came in off the US cash open. It's just it didn't last, and it was a pretty impressive bounce. Oil perhaps in the end had something to do with that, as oil got through its chaos and then closed up above $50. This certainly helped with the S&P, let's say, also kind of being able to reclaim some of those earlier losses. What I would say is I want to go back to the daily chart. Technically important, we hit the 15th of September low there, so we fell short of testing 2100. So I'm just going to switch. I've realized I'm not showing you the chart I want to show you. Here's the daily chart. So yeah, technically 15th of September low here, 2107. That's what held things up on the downside after the cash open yesterday. 2100's the big one. I made a bet with VAS yesterday, and the bet was that, well, actually VAS is looking good on this already, but I still think I'm going to win. The bet was that I bet that the S&P 500 would be trading below 2110 on the 31st of October. So, whatever, in 2 weeks' time, I bet the S&P will be below 2110. Vas has taken the opposite side of that bet. He thinks it's going to be higher. He certainly won the first battle yesterday afternoon as we got a strong rebound. But I still think, and back to that daily chart for the final time, I think ultimately we did have a down day yesterday, albeit a very, very marginal one. You might say this is a bullish reversal candle, but we'll have to see. There's a lot of macro things happening today. Certainly the financials, quarterly earnings are important. The data on the retail sales side is obviously really important. And then just carrying on, with all these other Brexit risks and so on. I still think ultimately that there's not too much to be positive about. So I'm still of a negative mindset, and I predict 2100 gets broken this month on the downside, but we'll see. I mean, oil will have a part to play in that, and for now, I mean, at least oil is back up, up above the $51 handle, which is certainly going to help to support the energy stocks. Look at the DAX, because we were trying to close the gap just as I started the briefing, and we've done it. So the DAX has been this is a 1 hour chart breaking up above yesterday's highs, and just pushing and testing. What have we got there? That's S1 support, which is also Wednesday's low. All right, so just shy of the 10,500 handle. Sorry, that's not S1, it's R1. Apologies, R1 in here. A nice batch of resistance, because you've got 10,500 handle, you've got R1, and you've got Wednesday's lows all grouped together. So we've closed the gap on the DAX. I think the next sort of 30 minutes are important. I think if the DAX fails to break Wednesday's low, then ultimately I think you'll see things turn, and the that short-term positive sentiment that we had briefly yesterday afternoon, I think is just temporary. Right? The longer it takes for the DAX to break Wednesday's low, then the less chance it's going to have of doing it. And as we drift into the end of the week, we're perhaps going to get a kind of negative mindset come back through. So that's my idea. Just on the euro, again, quite important technically. I'm assuming you spotted this, but yesterday's low was around about that summer low, the July 22nd, July 25th low. On the December chart, not on the continuation. This is for the futures. We have got a low just below that, the June low, just on around the 110 handle or just below the 110 handle. So, certainly an important week for euro dollar here in terms of breaking on the downside and, perhaps consolidating here. But just keep your eye on some of these levels, and certainly the 110 handle is incredibly important. So that may be tested. We're only 40 pips above that as we speak. Right, that's it. I'm going to leave it at that. I think it's 9 a.m. and keep your patience this morning. We've got important stuff this afternoon. All right, we've got the earnings releases from the banks. We've got retail sales. We've got Michigan data. We've got Yellen later on after the close. So certainly some interesting news flow. All right, that's it, guys. Enjoy the session. Thanks.